Morgan Stanley officially launched Bitcoin trading to their clients this week. And we know that Morgan Stanley is pushing Bitcoin to their $9 trillion of assets that they hold is absolutely huge. But I think there's a lot more to this. Obviously, since BlackRock launched their ETF in January of 2024, we are now finally witnessing the Wall Street competition over Bitcoin. They are coming in heavy. They want their share of the pie. But this executive at Morgan Stanley thinks that the next 18 months will absolutely change Bitcoin forever. So let's hear him out. This was at Consensus. Pretty interesting take here. Obviously, guys, I already know where you're coming from. You're like, I don't care what Wall Street says about Bitcoin. I get it. But they're here and they are not afraid of the quote crypto winter. So let's check this out.
That can harden that infrastructure. You're just putting your clients at risk, and that gets back to the original challenge, which is making sure we don't lose people's money.
So security, trust, which can come from being public in nature. One final question. One prediction or message over the next 18, 24 months?
I think everything is going to move a lot faster than people are think it's going
Agreed.
to move. I think people look at the crypto winter and everybody's upset about what's been happening, but and I've read a lot of people say, well, the hacks are going to slow down the institutions. Mm-hmm. It has nothing to do with that, because we were never going to rely on the great coding of whichever, like I said, project is driving these different features. We're going to work with the folks who are building different protocols, with the folks who are building infrastructures, to make sure that we can put our stamp of approval on it, and that's happening as we speak. And so I think more and more is going to move on chain more quickly than everybody thinks.
All right, so putting this slight shitcoinery aside, or wait, did I get, yeah, okay, okay, I made it. There is a few interesting points here. One, obviously, I think the big headline that he said is like, the next 18 months, things are going to move a lot faster than we expect. And from one vantage point, at least, as you know, I'm constantly bullish on everything. If I read into this and I give my take on what he's basically saying, it sounds like he is basically destroying the diminishing returns idea. Everyone is leaning on this idea that moving forward, we're going to see diminishing returns on Bitcoin. If you take the institutional interest into Bitcoin and you consider how much capital they have, I think if we see a very huge influx into Bitcoin, and remember, Morgan Stanley is recommending about a 2 to 4% portfolio allocation. We're starting to see Fidelity's getting more bullish. They're talking about 10%. We've seen reports basically saying, hey, if you believe in Bitcoin, then maybe a 22% allocation to Bitcoin is what you should be doing. So in context of how much capital is in the world, if we do see the more extreme side of these portfolio allocations starting to be acted upon, then I think we might be seeing a lot more capital flowing into Bitcoin than we even expect. And this is kind of one of those ideas that I've been saying for the last couple of weeks, where everyone thinks we're going to just get a slow, gradual adoption of Bitcoin. I don't necessarily think that that is set in stone. If we do find ourselves in a situation where people are finally waking up to Bitcoin, and rather the need for Bitcoin, what it can offer to you in terms of, censorship resistant, permissionless, peer-to-peer money, all the stuff that we like to talk about. But even further, the fact that if you just add, I think I saw a report this week, it was also Fidelity, and they basically said the 60-40 portfolio is dead. It doesn't work anymore. Even if you just add 1%, you're going to get a better ROI than the traditional portfolio allocation. But if you go as high as 3%, which really isn't that much, the returns blow everything out of the water. Now, to add on top of this, we are also seeing Morgan Stanley bull post out here. Shouts out to Bitcoin Magazine for catching this one. And they do the standard, Morgan Stanley's E-Trade published a report showing Bitcoin has risen much faster than other assets over the past 10 years. In the last 10 years, Bitcoin up 85.5%. NASDAQ 100, maybe 19.5%, S&P 500 13.3%, and gold 13%. They're out here bull posting, which is part of the broader conversation that we've been talking about. Remember how many financial advisors Morgan Stanley has. As you heard in that clip, what did he say? If you disregard the everything's coming on chain, the protocol stuff, you heard two things. One, they want to custody the Bitcoin. They want to be the source that people come to get Bitcoin. And then further, the big kind of maybe rhetorical tool, once we put our stamp of approval on Bitcoin, then the floodgates open up. Now, on that point, we did see a very interesting story come out of Morgan Stanley, which is, as I said, they have officially launched Bitcoin trading and Ethereum trading, but we'll disregard that for a minute. We'll totally ignore the shitcoinery. We all knew Wall Street was going to be shitcoining. Anyways, this is actually a significant move here. And I'll break down why. It's literally in the headline. Morgan Stanley launches E-Trade, quote, crypto trading at 0.5%, undercutting Coinbase and Schwab. What is one of the things that we've been telling you guys? And further, this is not a full endorsement of you should be buying your Bitcoin from Morgan Stanley, and I'll get into that a little bit in 1 second. But what have we been saying as Wall Street starts to come into Bitcoin, as they start to offer new products, as they start to offer Bitcoin trading, spot Bitcoin trading on their platforms, they are going to be working for you. This is no longer a theory. They're literally undercutting the whole industry and saying, hey, our fees are lower than everyone else out there. Not only are they putting their stamp of approval of you should be adding Bitcoin to your portfolio, but they are offering a very interesting product here, which is one of the theories I have been saying for a while. As we move forward, it is going to be very interesting to see how the native Bitcoin companies compete with the Wall Street giants. And as you can see, that competition is going to be better for you because, hey, maybe you'll be able to get better returns, better fees on your Bitcoin. Now, again, probably wouldn't be trusting Morgan Stanley per se. I know the average person, the layman, might trust Morgan Stanley. They do have a big brand name. They do have that authority figure here. They do have that sense of, oh, we can trust them. They've been in this financial industry, or rather any financial market, for a very long time. They got to know what they're doing. And that was what he just said. And this was, again, at Consensus, which is a shitcoin conference. But he basically said, look, we're not going to necessarily trust all of the Bitcoin company. We're going to bring our expertise, which to me is a little laughable here. And we are going to do this natively. So let me break down this article a little bit, and then I'll open it up to Nico, and then I'll give you some of my concerns. So, of course, Morgan Stanley has begun direct cryptocurrency trading on its E-Trade platform. The bank is charging clients 50 basis points, again, 0.5%. per transaction, undercutting Coinbase, Robinhood, and Charles Schwab. The pilot, as of now, is only live to a small group of users, but all 8.6 million E-Trade clients are set to gain access later in 2026, at least according to Bloomberg. Excuse me, of course. The 0.5% fee places Morgan Stanley below several rivals competing for retail crypto flow. Schwab charges 75 basis points, or 0.75%, on its newly launched spot Bitcoin and Ether trading. Coinbase retail fees can climb above 0.5% depending on tier and payment method. Quote, if I know Schwab, they likely won't let this stand. Others will probably undercut too. By the time the dust settles, it'll be pretty dirt cheap to trade crypto everywhere. Just as we saw with Bitcoin ETF expiration ratios prior to launch, this is why TradFi is no joke and crypto exchanges should be scared, commented ETF analyst Eric Balkunis. I've been saying that this was going to happen for a while. I think this might be one of the more interesting things going on right now, is to see how the native Bitcoin companies, all of us, quote, real Bitcoiners, how we are going to compete with Wall Street entering the game. The game has fundamentally shifted. It is a new era. This isn't the same Bitcoin that we've seen in the past, for better or worse. We are actually entering into the early or sorry, the early mainstream phase. I think that's what it's called. I'm blanking right now. No, the early majority phase. And as you can see, that competition is going to build up. Again, you may not like the institutions here, but one of the things that I definitely try to do is I don't think of a world that I don't just think of the world I want to see. I try to look at the world as it is and obviously nudge it and go to companies that are working towards the future that I actually want to live in. But as we're seeing right now, the interest and the entrance of the institutions here, the interest and entrance of Wall Street, it is doing some interesting things that I believe will fundamentally shake up everything that we know moving forward. And if these ETF inflows, if this amount of spot Bitcoin trading does get very popular amongst basically the masses here, the next 18 months could be, as was said in that clip, happening and moving faster than it has in the past. Now, that is a big claim considering Nico and I are basically 2017 Bitcoiners, which means, you know, we all saw what happened in 2017. And a lot of us are still chasing that dragon. We're still looking towards that incredible bull run that we saw in 2017. And a lot of us are thinking we're never going to see that again.
No.
I know. I agree. I want to believe, but
let me
look, it is
that.
interesting.
We will get that, but not in the condensed amount of time. It's just going to be elongated.
That doesn't sound fun. 5 years. 5 years for the games.
I don't think it's going to take 5 years either. It's just like the days. You guys have to understand the market cap of Bitcoin is just so much bigger.
Don't do that to me.
So it's just going to take longer for you to get the gains, but the gains are still there. Once Bitcoin reaches $1 million, ladies and gentlemen, like this is where this is the window. This is the window right now where you have to be really packing your bags, because once Bitcoin gets to the $1 million region, again, these price movements, it's just going to require so much capital for, like, think about it. It was a lot easier for Bitcoin to double from 1,000 to 2,000 than it was for Bitcoin to double from 100,000 to 200,000. Now imagine how difficult it would be for Bitcoin to double from 1 million to 2 million. That's why, like, we have this unique window of opportunity where there's still tremendous upside in Bitcoin, but that window is closing. And that window to get to 1 Bitcoin is closing even faster. Most people don't have $79,865 of disposable income to put into Bitcoin. Like, that's the reality, right? So I just wanted to give that context. Opti.
No, that's. I mean, I kind of disagree considering what we saw with gold last year, but that
is very true. Like,
that's my big disagreement.
We could see like this like ginormous rip, because at the end of the day, guys, the thing about markets is that, like, I don't know if you guys have seen the SanDisk stock.
Yeah, it's going, dude. The Wall Street, the stocks are trading like shitcoins right now. It's crazy.
The SanDisk stock, due to like the whole AI, the AI adoption, 50x'd in 1 year. 50x, 5,000% in 365 days.
And what was the market cap?
So anything is possible. I don't know the market cap, but so anything is possible in the markets. And in the beginning of 2017, you didn't think that Bitcoin was going to 20x in 1 year, right? So anything is possible, but at the same time,
the market cap is only a little under 200 billion.
So, like, at the same time, though, guys, like, you know, it's the law of big numbers, right? Like, it's like the market cap of Bitcoin is 1.35.
No, we're at 1.6. Or I don't know. It went down a little bit. It's like 1.5 trillion.
1.5 trillion. So, like, obviously, it takes a lot of capital to move. But at the same time, Opti is absolutely right. Like, you had gold pull off this enormous move,
and silver,
and the market cap of gold was enormous, right? It went to $35 trillion. If Bitcoin reaches the market cap of gold, that would be $1.7 million per Bitcoin
in a year.
And that was the goal. Like, initially, when we first, like, because we cover this all the time in the Clark Moody dashboard that we have, And by the way, guys, we're about to start hearing noises. They're doing.
Yeah, I didn't imagine the noises, guys. You guys will hear them today.
They're doing work on the rooftop of the studio. So bear with us. But it's going to be a lively show, to say the least. You might hear some buzz saws and some hammers, but it's okay.
It's going to be horrible.
We're going to keep the show rolling. But yeah, it is possible. Like, technically, it is possible.
Well, it is possible, but to really give the context of this, the reason gold went as high as it did, it wasn't necessarily retail. It was the central banks were acquiring a lot of gold. So obviously that's probably not in the stage that we're in, but like, it can happen.
What happens when central banks start accumulating Bitcoin?
Well, we have one, the Czech Republic, but they don't have that much. They don't have that much capital. But anyways,
Czech Republic, man.
Anyways, going back to this Morgan Stanley E-Trade. Oops, sorry. My biggest contention here, and I tried to research this for you guys, so I'm going to do the default that I think this is what they're doing. Obviously, from a hardcore Bitcoin first principles perspective, my main question when I heard about E-Trade offering, quote, spot Bitcoin trading was a very simple one. Are they going to allow you to take that Bitcoin off the E-Trade platform? Now, I couldn't find any information regarding this because, as you can tell, as that report basically said, this is only to a small group of Morgan Stanley E-Trade clients that are using this, that are able to trade Bitcoin on their platform with very low fees. So I'm going to default on the idea that I think it's probably going to stay on the platform for now. I mean, we have seen other companies do something similar. I'm pretty sure, if I'm remembering correctly, that Robinhood, basically when they launched their Bitcoin trading, you couldn't actually take your Bitcoin off the exchange, and then slowly and later you were allowed to withdraw your Bitcoin. So I'm guessing, again, I tried to look up this news for you guys, this very important detail, but I didn't get anything. And so I'm guessing, just my best guess here is that that's probably how it's going to work out when it launches, is you can buy Bitcoin, which is still kind of like just getting Bitcoin exposure. In my opinion, it's not too different than just buying an ETF. Basically, it's still a Wall Street wrapper on it. So I'd be very surprised if when this launches to every E-Trade client, whether you're going to be able to withdraw your Bitcoin. Now, if that's the case, then obviously these Wall Street products are a big no-go from our perspective. We would not be recommending them. Even if, quote, they have lower fees, you don't want to use a platform that, you can get lower fees. You might be able to technically get more Bitcoin, but if you can't take the Bitcoin off of their platform, then it's not really your Bitcoin. So that was the biggest question that I had when I heard this news. Can you withdraw your Bitcoin? Now, another interesting aspect that we have seen similar patterns play out like this in the past is they did the same thing that every other institution has done so far. They let a small group of clients use it. And I'm only going to, again, guess that those small clients that are able to get, quote, Bitcoin from E-Trade are probably their highest net worth individuals, which obviously is something that we've been talking about on this show for a long time, is they always do the same thing. Oh, yeah, hey, we're launching this product, but we're only going to allow our high net worth individuals to get in early, which is interesting because what if they're the ones buying right now at the bottom? I know Bitcoin kind of retraced a little bit here, but you let your rich customers come in, scoop up a lot of Bitcoin at the absolute bottom. Then you open it up later in the year when you let the retail come in, when you let the layman come in, and they're buying what? Halfway up the bull run, maybe at the top of the bull run. And they're expecting, at least everyone still kind of expects this idea, that the asset managers that are recommending your portfolio allocations, the stocks you should buy, the commodities you should be buying, they have your best interests in mind. Well, it looks like they're kind of doing the same thing. One, you're probably not going to be able to withdraw your Bitcoin. And two, they're letting the rich people get in first, which, or rather, as we've heard in the past, we're only going to let high net worth individuals with a high risk tolerance get in early. Which obviously, that's the beauty of Bitcoin. There is no gatekeepers. As long as you have dollars, you can get Bitcoin, and you don't need to trust an advisor to tell you when. You don't need to trust an institution to basically hold your hand through the process, though for some people they like that. But, you know, those were my basically biggest concerns here. Those are my cons from what I can kind of parse through the information we currently have.
But let's explore that further, right? So, like,
yeah, the other one, will they rehypothecate?
So yes, 100%. And I had a stream with Larry Lepard and Caitlin Long, which we should probably do that soon, Opti. And they 100% will rehypothecate. But the beauty of Bitcoin is its absolute scarcity, right? So the rehypothecation card, you can only play to such an extent. It's a double-edged sword because eventually people are going to do the math and they're going to say, wait a second, why is there 25 million Bitcoin? Now, the other thing I want to address is we had this utopian dream as a community like 5 years ago, and the community was a lot more militant, rightly so. And the whole, you know, theme, the whole ethos of all of us on X and on the Bitcoin community as a whole was, hey guys, this is a revolution. Everyone is going to take self-custody of their Bitcoin. We're going to fix the money, fix the world, et cetera, et cetera. That utopian vision was naive. You kind of have to meet people where they are. And the reality is that the lion's share of the world's wealth is held by older individuals. And those older individuals are used to the traditional financial system. They're not comfortable with the idea, the hammer time, baby. Hammer time is starting. They're not used to
stamp seed plug.
Exactly. They're not used to, you know, going outside of what they're comfortable with. But again, going back to the Trojan horse reference, this is a Trojan horse because eventually they will come to that realization. And even if they don't come to that realization, guys, the biggest wealth transfer in human history is going to happen in the next 10 to 20 years. And that wealth transfer is going to go from the boomers to the Gen Xers to the millennials. And let me ask you guys something from a percentage basis. How many millennials do you think have a very good outlook on the traditional systems? How many millennials, in your view, are comfortable with what Wall Street did in 2008, right? Which is basically steal our future. How many millennials are comfortable with the traditional financial system? They're not comfortable with that. So for them, it's going to be a big portion of them are going to be like, yeah, listen, I love my financial advisor. This is great, but like, why am I going to pay an extra fee if I could just take self-custody of this Bitcoin myself? So the utopian vision that we have was a little bit naive. It doesn't mean it's not going to play out. It's just going to be a multi-generational thing. It's going to be a multi-generational change, right? So I'm still extremely bullish. This was, excuse me, this was an inevitability. Number go up was going to inevitably attract TradFi. Number go up was inevitably going to attract Wall Street. But everybody has to remember Max Kaiser's famous quote, you don't change Bitcoin, Bitcoin changes you. So while Wall Street is going to try and take over Bitcoin, what I think eventually is going to end up happening is it's going to be Bitcoin that ends up changing Wall Street. And I think a lot of people, and this is a big, right now, this is a big point of contention right now. This is a big topic that's being talked about regarding the Clarity Act. Like the reason the banks are so freaked out about the Clarity Act is because they're scared that people are going to take out their deposits from the traditional banks and putting it to these new platforms that do offer interest, yield, rewards, however you want to frame it, but it's really interest. So yes, this is a pivotal shift, ladies and gentlemen. This is like the equivalent of what the internet did to the economy and what the internet did to society. In the 1990s, everybody thought that the internet was going to be this huge thing. It was going to change everything. And they got a little bit ahead of their skis. However, they were right. That thesis was right. It just took a decade. It just took 2 decades to fully play out. If you're a business today, could you operate? The lights are shaking. It's hilarious. They might, guys. We literally might.
It might have to be a short show.
We literally might have construction workers fall through the roof.
No, we might just have to do a shorter show today.
But anyways, that's my take on all this. This is extremely exciting. We're winning, guys. The Trojan horse is in. You know, I know it doesn't feel like what we all envisioned as hardcore Bitcoiners.
Is this what winning feels
as
like?
Bitcoiners that take self-custody. However, I will say that this is definitely a step in the right direction. The Trojan horse is inside. The Trojan horse is inside government. The Trojan horse is inside Wall Street. And it's just going to take a little bit longer than we all expected. But the gains are there, guys. The gains are there. Stay humble. Stack sats. Number go up technology. It's going to do its thing. Infinity divided by 21 million. Bitcoin is going to win because of its incentives. And all they have on the other side is coercion. My money is always on incentives. Guys, it's going to be a great show. We have an update for you guys regarding the Clarity Act. We're going to cover that. And then also, I called it on yesterday's show, ladies and gentlemen, about a cash flow producing business. I was telling you guys yesterday on the show regarding the 21 announcement last week, and it seems like Jack Mallers literally confirmed exactly what I was talking about yesterday. So we're going to have an update on that as well. Guys, it's going to be a great show. Smash the like button, consider subscribing, and you know, grab a drink, get comfortable. We're just getting started, baby. We're going to be right back just after the break. Today's episode is brought to you by Bitcoin Well Infinite. If you're a serious Bitcoin buyer, you've probably hit the same wall. Most platforms make you give up custody just to play by the rules. Bitcoin Well Infinite fixes that. They're North America's only publicly traded non-custodial OTC desk listed on the TSX Venture Exchange, which means transparent operations and zero counterparty risk.
You buy Bitcoin, you take immediate control, period. For trades over $50,000, you get a dedicated executive Bitcoin advisor, competitive spread starting at 1%, and immediate delivery straight to your own wallet. No custody risk, no withdrawal fees, just institutional grade execution with full asset control. If you want to buy Bitcoin the right way, book a free consultation at bitcoinwell.com/OTC or email infinite@bitcoinwell.com.
I want to give a shout out to our partner, Stampseed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? Stampseed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates instead of just writing them down on paper. Paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They're also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo, and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on Stampseed and use promo code SIMPLY to get 15% off anything on the stampseed.com store. All right, everybody, we are back. At the time of recording, the Bitcoin price is $79,830. Sats per dollar, 1,253. Block height, 948,337. If you guys could hear hammer time, write hammer time in the chat, baby.
No, they're not actually fixing the roof. They're just hammering stamp seeds up there.
They're just hammering stamp seeds. Realized monetary inflation, 0.83%. Market cap, 1.6 trillion. Realized monetary Bitcoin versus gold market cap, 5.32%. Percentage issued, 95.36%. Decline from all-time high, negative 36.7%. So if you're buying Bitcoin right now, you're getting it at a 36% discount, which is quite big of a discount. Anywho, I do want to talk about this, guys. So What did I tell you yesterday, ladies and gentlemen? What did I tell you? What did I tell you? It all goes full circle. I told you guys this, right? You all go through this as an experience as a Bitcoiner. Eventually, initially, you say, never sell your Bitcoin. I'm not going to sell my Bitcoin no matter what. And then you come to the realization that, hey, I'm gonna end up having to sell my Bitcoin a little bit, just a little bit of my Bitcoin. And it seems like Michael Saylor finally went through that full circle. Everyone has to pay their price of tuition. This is the beauty of Bitcoin, is that there's no special rules for elites. There's no special rules for institutions. There's no special rules for anyone. It's rules without rulers. It's actual equal money, right? It's a level playing field. And Michael Saylor is coming to the same conclusion that I came to, the same conclusion that Opti came to, and the same conclusion that I literally told you guys on yesterday's show. He might have watched it, maybe. But this is what Michael Saylor said: buy more Bitcoin than you sell, right? That's exactly what we told you guys yesterday, right? Eventually, you know, in the plot line, in the story of a Bitcoiner, you go through this experience yourself. Initially, you don't want to sell no matter what, and then eventually you're forced to sell for whatever reason, to pay for living expenses. Maybe you were overexposed. Maybe you were putting too much of your income into Bitcoin and you have to sell some to pay for expenses or whatever. And Michael Saylor is going through that same exact experience. The only difference here is he has a massive following. He has a huge following, so it got a lot more attention. Now, going back to what I was saying, does this mean that the strategy stock isn't going to perform well? That MicroStrategy is in peril? That Michael Saylor is in peril? Absolutely not. He's just learning the lesson that all of us Bitcoiners have learned the longer that you're in Bitcoin, right? So he's saying it. He said it in a very simplistic fashion. Buy more Bitcoin than you sell. That's it. That's really what it comes down to. Guys, you don't have to make it over the finish line with 100% of your stack. I said this yesterday. You just have to make it over the finish line with the majority of your stack. That's what it comes down to, ladies and gentlemen. All right. So that's the first update. The second update that I want to talk about is, again, called this yesterday. Opti, I thought it was a little slow yesterday because I was just getting back into the hot seat.
Wait, just yesterday?
And this is why he's my brother. This is why he's my brother. If he wasn't making fun of me all the time, I wouldn't consider him a brother. This is what brothers do. But this is what I also said yesterday. So Hodl Whisper says, one does not simply create operating
Can you zoom in a little bit?
So one does not simply create operating cash flow on pristine collateral without taking significant risk on the said collateral. Investors beware. And then Jack Mahlers is saying exactly what I'm saying. I have nothing but respect for what Strategy has built. No issue from me. And then he goes, exactly what I said, verbatim on yesterday's show. Operating cash flow comes from building profitable businesses. I'm not talking about generating yields on Bitcoin collateral. I'm talking about real operating income alongside a Bitcoin treasury. So, yeah, man. I mean, tomorrow's Bitcoin news today, baby. Simply Bitcoin. I mean, Opti, it's crazy because I don't know. Maybe I have imposter syndrome. Maybe I doubt what I'm saying. But for the last 6 years or so, what I've come to realize is, guys, we're usually more right than we are wrong. We might not be completely polished. We might be wearing hoodies on the show, but we're pretty spot on our assessments and on our analysis. So yeah, man, Saylor and Mahlers confirming exactly what we were talking about on yesterday's intro. Again, quoting Mahlers, operating cash flow comes from building profitable businesses. And then Saylor, Mike, buy more Bitcoin than you sell. So again, full circle, closing the loop there, weaving it back in. 2 for 2, baby. 2 for 2.
Yeah, I mean, look, you guys know, I always say I have a 42 IQ. It's highly debatable. You know, it might be lower. You
gotta stop saying that.
It might be higher.
Opti's just saying that. Opti's just saying that, but Opti's actually really smart.
Hey, dude, don't blow my cover here.
He went to university for philosophy.
Hey, all right, quit doxing me.
For philosophy.
Dude, doxed out here.
Playing dumber than his mark, bro.
Hey, it's a 21st law of the 48 laws of power. All right. Literally, go look it up. I didn't make that up. I actually didn't make it up. Go look at the 21st law of the 48th law of power. That's literally what it is. Anyways, I say all that to essentially say that what is super interesting to me, and kind of picking back off what Nico said, is, you know, we've been making content for a long time. We've been Bitcoiners for a long time. And there is that classic meme, that classic idea that when you work from first principles, it doesn't become that difficult to predict what's going on. And one thing that you do notice in more a traditional financial lane is that things are overcomplicated for a reason. It's so that you go to these financial advisors and they recommend stuff so that you can, you know, properly invest your savings or properly try to make some money. But when you come into Bitcoin and you just have a basic, maybe it was not necessarily basic, but you work from a first principles, from a foundational level, and you kind of simplify everything going on and try to make sense of just like these terms and these ideas, it's not that difficult to really just see through all of the noise. And like we said yesterday, you know, Jack Mahler said exactly what we were saying on the show yesterday. It's not that complicated. Like, you want a profitable business that has cash flow. Now, if Bitcoin is money, and this is, I didn't say this on the show, but I was saying it maybe before the show or after the show, I forget. If you just switch Bitcoin for dollars in this whole idea, it's not that crazy of an idea. If we tell you never sell your dollars, or rather, that's not what people say. That's what Bitcoiners say. We actually say the opposite, like sell your dollars for Bitcoin. But if someone tells you to save a lot of money, you know, what's, I forget what the statistics are, but right now, you know, there's that one YouTuber, his name's Caleb Hammer. I forget what the show is. It's like Financial Audit or something. People love that show. I really can't stand the show, but I respect the guy's hustle. You know, there's this idea that, like, as a millennial, as a young person, there is a number depending on how you want your life to live. And that's usually, I think right now, somewhere around like 5 to 10 million if you want to have a bunch of kids and you want to be able to pay for your kids for, you know, 18 years, et cetera, live in a nice house, provide for your wife, et cetera. Like, that's the number that most people should be looking towards. But we all know that, yeah, once you get to $5-10 million, like, you may not be filthy rich, but you'll be able to live comfortably. No one thinks it's crazy to be like, yeah, I made a bunch of money and I'm literally never going to use that money. If Bitcoin is money, if Bitcoin is the best money, I kind of like the lane that we're going down right now, because this idea, obviously, it's a good soundbite. We were, you know, having fun yesterday. It's like, never sell your Bitcoin, asterisk, but if you need to use your Bitcoin to improve your life, obviously, don't just have a bunch of Bitcoin and then not be able to survive. Like, it's just not a good soundbite. But if you switch Bitcoin with dollars or with money, the idea is not that crazy. It's like, look, build a huge treasure chest of Bitcoin. And the longer you're in Bitcoin, if it is your money, if you are all in, using a little bit of that Bitcoin to live your life or live a better life, like, you're not breaking like a holy sanctimony. You know, it's not sacrilegious here. It's like, it's your money. Do what you want with your money. Now, that's just for an average everyday person. Obviously, with SAYLOR, it's a little different. I actually saw a funny response to that tweet that Nico brought up. You know, just what did he say? Buy more Bitcoin than you sell. I saw a funny tweet and it was like, SAYLOR, we want our kidneys back. SAYLOR, I want my kidney back. Because obviously he's like selling all your chairs, sell your kidney to buy Bitcoin. You know, do a HELOC on your house to get more Bitcoin, et cetera. But it's not that crazy of an idea. It's only news because it's coming from SAYLOR, because he built his brand 100%. Over this whole idea of, I am never going to sell Bitcoin.
But guys, so did I. And so did Opti. And so did most Bitcoiners. This is what you guys have to understand.
Let's guys, sorry about the roof noise. They're redoing the roof on the studio today, and we thought we'd be able to come in here and it wouldn't be noise, but hopefully it's done today. Today's show might be a little shorter, so they're yelling. But continue, Nico.
So yeah, I mean, like, look, guys, all of us said this in the beginning. The only difference is that SAYLOR had this massive audience, this massive following. He has a publicly traded company. I'm seeing this tweet right now. I don't want to say who it's from, but it says, it's logical to sell when you need to, but yet another inconsistency to build a brand on never selling without meaning.
Yeah, that's bars.
But here's the thing. I said the same thing to my friends and family. I literally said the same thing. And Opti probably said the same thing, right? Like,
I still say this every
like,
no, I actually caveated. I'm like, look, just buy Bitcoin, hold it for like 5-10 years.
Okay.
You know,
but
it's still, never sell.
In the first years, what were you saying?
I like never sell your Bitcoin.
Exactly. This is the point I'm trying to make.
Yeah, you're right.
So anyways, guys, it's going to be a great show. Actually, really positive news from the Clarity Act. It seems like it's going to pass, ladies and gentlemen. 180. The poly market odds have it at a right now at a 70% chance of passing. So that's big breaking news, guys. We're going to be right back just after the break. Here we go. I want to give a shout out to our partner, Ledin. Here's something most Bitcoin holders never figure out until it's too late. You're sitting on wealth you can't touch without selling. Ledin fixes that. Bitcoin-backed loans. You keep your stack, you get cash. And they just introduced their lowest rates ever. No complexity, no fine print. The larger the loan, the lower the rate. These new rates apply to all new loans, refinances, and renewals. You'll see all the rates up front before you apply. The new, lower rates come with Ledin's gold standard protection. Your Bitcoin remains custodied and is never lent out for interest. Perfect 8-year track record of keeping clients' assets safe. Auto top-ups, LTV alerts, and partial repayments to keep you in control. Repay whenever you want with zero penalties or monthly payments. Ledin's perfect $10 billion track record through every market cycle in the last 8 years speaks for itself. Don't choose between a great rate and the safety of your Bitcoin. Get both at Ledin. I want to give a shout out to our partner, Bitkey. If you already self-custody your Bitcoin, you already know the deal with hardware wallets by now. Complex setups, clumsy interfaces, and a seed phrase that can be lost, stolen, or forgotten. Bitkey fixes that. Bitkey is a multi-sig hardware wallet built by the team behind Square and Cash App. It packs a cryptographic recovery system and built-in inheritance feature into an intuitive, easy-to-use wallet with no seed phrase to sweat over. It's simple, secure, self-custody without the stress. Time named Bitkey one of the best inventions of 2024. Get 20% off at bitkey.world. That's BITKEY.world with the code SIMPLY.
Hey, wait, Nico. Before we move on, can we add a little more to the strategy story? Because one other little thing that I did find interesting is the fact, and I blanked on it. I remember during the ad break that what I did find interesting is it is kind of something that you said yesterday, though you were saying it in terms of like when we see the Bitcoin treasury companies start to capitulate is when we know we're at like the bottom of the bear market. What I did find interesting on this saga that we're seeing is that SAYLOR is obviously feeling the pressure from the plebs and from everyone out there, because he also had another tweet, and this one came out of strategy in regards to everyone freaking out about him saying sell some Bitcoin, or we will sell some Bitcoin. Not only did he do the buy more Bitcoin than you sell, but strategy did an interesting tweet where they're like, as long as Bitcoin goes up 2.3% a year, we'll be able to pay our stretch dividend. And it's not so much about what he's tweeting. It's more about the fact that like, he's starting to feel the pressure. You can tell he's starting to feel the pressure. And remember when we were in the first initial drop around October, SAYLOR was on CNBC or Fox or whatever, and it was like the first time we saw him crash out, and we were like, oh, this is different. He's starting to feel the pressure. Okay, so maybe signs of bear market action going on, or towards the tail end of a bear market action happening. Like these are, I would say, healthy signs. Anyways, sorry. I just wanted to add that in there. Nico, continue.
That's great context. That's great context. All right, everybody. So let's get into the Clarity Act, ladies and gentlemen. 67%. This is essentially the highest it's ever been since February. February was at 82%. Now it's back up to 67%. And again, it's not just noise. Some things have passed. Again, for the audio listeners, this is the poly market odds right now. There's about $636,000 worth of volume. So there's a lot of money on the line. A lot of people are gambling on this, which is funny. Everything's just a bet now these days. So
the world is a casino.
The poly market odds right now for the Clarity Act signed into law in 2026 is 67%. Okay, so what has changed from then and now? Well, guys, I told you the importance of bipartisanship. Check out this breaking news tweet from the one and only Pete Russo. Just in, Democrat senator just said that Bitcoin Clarity Act will pass. We're going to have to compromise. Clarity is happening. So this is big news. I told you guys that for Clarity to pass, it needs 60 votes in the Senate. The Republicans only hold 53 Senate seats. So they need at least minimum seven Democrats to go across the aisle and get behind the Clarity Act. Once it passes that 60 vote threshold, there's an extremely high probability that this will get signed into law in the nick of time. Right. And remember what executive chairman of HIVE Digital Technologies, Bulldog Holmes, aka Frank Holmes, said. He said that if Clarity Act passes, he expects $250,000 Bitcoin. So what else happened? On the other side, White House aims for July 4th deadline to pass the crypto structure bill. Man, I got to give a shout out to my boy Pepe, bro. Digital 1776.
G-Money Pepe.
Digital 1776, guys. Digital 1776. This is crazy. This is a very symbolic date, right? Again, breaking from the system that we have now, which is the system that was established in 1913, right? The central banking system that, again, during the central banking era of the United States, we had the two largest world wars in world history. We had the biggest depression in world history. We had the greatest recession in world history. And remember, the central bank was promoted to the American people to promote stability in the markets. It clearly did not do that, right? So, you know, and then this reminds me of the Hayek quote, right? Which is, it's too well entrenched. The incentives are too strong for politicians to vote down the central bank, because fundamentally the central bank is what's funding the U.S. government, it's what's funding the deficit spending. So again, no one is better than their incentives. So to quote Hayek, you have to find a clear roundabout way, you know, to get money out of the hands of government. So I think it's very symbolic that the White House is saying July 4th is the deadline to pass the crypto market structure bill. And also it is going to be, I believe, the 250-year anniversary of the United States of America. How symbolic would that be, right? How epic would that be? The first pro-Bitcoin president, almost assassinated twice. He had the epic
three or four times now.
Oh yeah, now it's 3 times.
Yeah,
that's right.
yeah.
Now that he's president, that time just happened. And then he had the epic fight, you know, saying. So again, this is full circle. Opti, take it for a sec.
Yeah, so obviously I like the memetics here. I did see that this morning. I thought that was really interesting as well. The White House saying July 4th. Obviously, the implications are It's like the Always Sunny, you know, it's the implications of the thing that is the most interesting, or maybe the significance of it, the symbolism of it, which I think is the most interesting aspect of this. Obviously, you know, shouts out to our boy G Money, Digital 1776. And in the context of this, obviously July 4th, 1776, where the U.S. claimed their independence from Britain. Now, if this does pass on that day, it would be a new form of independence. Now, obviously, there's a lot of contention about what's going to actually be in the bill, if it's going to really help a lot of people, well, rather help the Bitcoin industry per se, in particular, versus the, quote, digital assets industry. But the significance, the symbolism is probably the biggest tell here, at least maybe the biggest signal, the biggest takeaway that I'm getting from this is if it does pass on July 4th of 2026, then is that not fundamentally ushering in a financial independence here? Which I think, obviously, I don't necessarily have to spell out the symbolism here. But anyways, on that note, what I will say that is a bit cynical in regards to the Clarity Act actually passing, I know the betting odds are getting better. They have basically flipped on a dime. You know, Friday, it looked like it was good. Then by Monday, Tuesday, it was like, oh, it's not going that good. And now we are seeing that, like I said yesterday, the clock is ticking. So to give you kind of a time frame here, they've been saying the markup's going to happen by next Monday. And then there's an interesting article this morning in Politico. It was called Wall Street is Losing Its Crypto War. And it's basically saying the banks are running out of time. They're trying, they're trying to fight the crypto industry. They're trying to fight the Clarity Act, but they don't have that much time, and they might have to basically push this through, and then they'll do some stuff on the back end, which usually isn't a good, a good plan here. But we do know that the Senate session is basically only going to be for the first 2 weeks. So this next, if it doesn't, the markup bill doesn't happen by next week, we're going to have a 2-week break, 2-week relief of talking about the Clarity Act because they're not coming back until June. And then they got a very short time window here to get it passed by July 4th. So again, the clock is ticking. And if it doesn't happen by July 4th, like the White House wants, I've heard them say by August, but again, they take another break in August. And then by the time they come back, it's the midterms again. So if this doesn't happen in the summer months, I think we could all venture, no matter what the prediction markets are suggesting, that it's probably not going to happen this year. But again, put your money where your mouth is. And I did see another metric the other day, which I find to be probably the most interesting aspect of all this. I don't know if you guys saw this, but it said only the top 1% on prediction markets make money. And everyone's basically out there on Twitter and talking about, it's like, yo, they're just insider trading on these prediction markets. So it might not necessarily be that you're getting the best clear data here in terms of, oh, this is what the collective consciousness is thinking. The main signal here might just be that the insiders know this is going to happen and they're putting their money up so they can make even more money. So I guess it's looking a little better than it did a couple of weeks ago, but the time is running out because there are going to be a lot of breaks in the next couple of months, and then the midterm cycle is coming back in. So, I appreciate all the work that all of the Bitcoiners have been doing. I appreciate the fact that this is bipartisan. Actually, Nico, before I move on, I did see Senator Lummis tweet in regards to this morning. Let me see. Did I put it in our show notes? Yeah, here we go. All right, let me pull it up. This is also breaking this morning. Here's Senator Lummis's take on it, which I think does give us a little more context of what's going on. So Senator Lummis tweeted, the American people have made it clear America should lead the way on digital assets. Let's secure our financial future for generations to come. Let's get clarity done now. Now, obviously, we've heard that before, but she's quote tweeting these statistics here, which are very interesting. And it goes, support for the Clarity Act crosses party lines. 52% support, only 11% oppose. Net support, plus 48 Democrats, plus 43 Republicans, and plus 32 independents. Voters obviously overwhelmingly favor clearer rules and consumer protections for digital assets. So it's, you know, again, shouts out to the hard work of Senator Lummis, to Bitcoin Policy Institute, to the Satoshi Action Fund, to all of the Bitcoiners that have been lobbying, I guess, for lack of better terms,
to simply Bitcoin
for our tweets.
No, dude.
I'm joking. But shouts out to every Bitcoiner.
Far more than
I know. I'm just trolling. So I just want to say, like, a huge shout out to every Bitcoin.
It was a combined effort of the entire Bitcoin community.
Yes, exactly.
I do want to give a shout out again to BPI, to Dennis Porter, Satoshi Action Fund, to Senator Cynthia Lummis, the Bitcoin senator.
To other senators too. There's a lot to name.
To Bitcoin Magazine as well.
Bitcoin Mag, exactly. So if it does get pushed through, I would say I hate to say this, and I'm probably going to get clipped out of context here, but we do have to, you know, give the devil its due. Coinbase as well. You know, even Binance here, you know, like they are actively working towards this. And you know, I hate to say it. You guys are going to call me a shitcoiner in the chat, I know, but this has been a collective effort. If it does get over the line, then every single Bitcoiner, I think, can pat themselves on the back, because it hasn't just been, you know, a select few people. So we'll see. I'm not really holding my breath, but
absolutely. But it's 70% odds, ladies and gentlemen, for the Clarity Act. And again, Frank Holmes, 250K Bitcoin if it passes. Really, really exciting stuff. Guys, we're going to be right back after the break. I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy, HIVE has quadrupled its global Bitcoin mining footprint and channels that same scale into high-performance compute, where their AI cloud is now ranked #1 in the world for network performance. At HIVE, you've got dual engines, Bitcoin and AI humming, roaring, accelerating in unison. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable digital infrastructure. You can catch the latest buzz at Hive Digital Tech or at hivedigitaltech.com.
I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay solid. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store.
All right. Guys, we've been hearing about the big print happening for a long, long time from Bitcoiners. Now, we aren't at the quote-unquote big print moment yet, but we are starting to see signals of this not QE phenomenon playing out in real time. And obviously, we all know Jerome Powell is out here very soon. Things can fundamentally shift. We know that when Kevin Warsh goes in, he's probably going to do Trump's bidding. At least that's kind of the common consensus here, which means lower interest rates and probably the money printer finally gets turned on. But we are starting to see the expansion of the balance sheet. So first and foremost, shouts out to the boys, or I don't even know who's over at Kobayashi Letter, but the Fed is loading up on U.S. Treasuries. You can see Fed's holdings are finally increasing, guys. They have started increasing all of this year. So not only do we have the ISM PMI expansion, which is basically, quantifying the economy, whether it's in contraction or expansion, whether people feel like things are growing or, we got to kind of tighten our belts here. But we are now seeing that the Fed's balance sheet is going up. Now, I have, Nico has made fun of me a few times on the show saying that Opti doesn't care about the middle class because I keep saying that, look, they're going to print money. They're going to print money. Your purchasing power is going to get decimated. Well, we have the data here, guys. The Fed is increasing its U.S. Treasury. They're basically, printing their own money. It's like one of these things. It's I'll sell you something. It's basically like an auction, like an art auction. I'll create a painting that is worth nothing. I'll have someone bid up the painting. I'll buy the painting from myself, and I just magically made, $10 million. You can think of it in this term. They're printing money, creating money out of thin air, and then they're buying it back for themselves to give it a market price. They are expanding the money supply. But this is not just happening in the U.S. This is a very interesting quote, and shouts out to Bitcoin News for this one because I missed this morning. This is absolutely crazy when you consider the implications of the yen carry trade going on. And here is a quote. This guy is Takesha Fujimaki, former Japan head of Morgan Bank, now JP Morgan Chase. And the quote is, "The countdown to the worthlessness of the Japanese yen has begun. Prime Minister Takashi's forbidden prescription to wipe out the $1,342 trillion yen debt." It's, guys, the big print. The literal idea of a hyperinflationary scenario is like at the finish line or at the beginning line here. And this guy, again, what's his name? Takashi Fujimaki basically said to prepare for hyperinflation, that they are doing an inflation tax on the people, that the only way they can get out of debt is by inflating their debt away. Which is what we've been saying. This is what Bitcoiners have been saying forever, that the big print is on the horizon. Now, if this was just two isolated scenarios, then you probably, it probably wouldn't be that big of a news. It probably would be one of those like, okay, yeah, I know if it's smoke, that means there's fire. But here is like, there is definitely fire because you got to understand, Japan, for the longest time, has basically been the venture capital central bank of the world. If now they're starting to prepare for a hyperinflationary scenario, they're going to inflate their debt away. That is going to, without a doubt, 100% have contagion to every other country in the world. If the US, Japan, all the big economies in the world, the G7 nations of the world are all in this scenario where they have to expand their balance sheet, or else you do not want to be holding fiat currencies right now. They're basically telling you, yeah, we got to print a boatload of money here. And again, Japan is 100%, well, I wouldn't say maybe 100%, but totally intertwined with our economy in the US, Western economies in Europe, the G7 nations. Japan has basically been the almost interest-free loaner of the world. You take money from Japan, the yen carry trade, you take money from Japan, you invested in your economy, the interest payments were super low, they were super long. Now they're getting to a point where it looked like last week, I believe it was last week, they were selling US treasuries because they're trying to prop up the yen. If we're in this scenario where they're trying to protect their currencies, this could get out of hand very quickly. The big print might be on the horizon here. We are starting to see central bank balance sheets expand. So look, I'm not here to doom. I'm just saying, you see this stuff, and then not just this, technical phenomenon happening, but at the scale that it is happening and you compare it to the last time we had a financial crisis in 08, this is going to blow it out of the water. But for most of you guys here, if you hang out with us every single day, you're obviously in Bitcoin, you are protected. But things could get very brutal for everything. Now, that is, of course, the doomer perspective, the clear pill, the white pill perspective. The orange pill perspective here is always the same. More dollars buying for value for the same amount of value means number has to go up. That's the simple of this. That's the simple math of what's going to happen. But the balance sheet expansion from the central bank, they're going to destroy purchasing power. And we know that that's what they want to do. So it's crazy.
It's infinity divided by 21 million, baby. So, you know, the more money they print, this is why Satoshi literally created Bitcoin, right? It's in the Genesis block. Chancellor on the brink of the second bailout for banks, alluding to money printing, right? This is what Bitcoin was literally made for. So, you know, they inevitably are going to print money. Lynn Alden, nothing stops this train. Larry Lepard, the big print. It's really not that difficult to understand. Governments have to do this. They're spending more than they're collecting in tax revenue. And if you're looking at the news coming out of Europe, it's absolutely crazy. Like now the Netherlands is proposing, and it looks like it might pass, I might add, a 36% wealth tax. That is bonkers. So instead of government spending less, they're taxing more, which is
stealing more.
I didn't say that. Which is crazy, right? Governments don't have a tax collecting problem. They have a spending problem. And going back to the Netherlands, and I was watching a video on it yesterday. Right now, in the Netherlands House, or the equivalent of the House, it passed, and it looks like it's going to pass the upper chamber as well. But they're proposing a 36% wealth tax. And that's crazy, because that means that if you have an asset which you haven't sold, and that asset appreciates, 20% the next year, you owe 30%, 36% on that appreciation, even though you haven't sold it. And then what happens if the asset goes up in value, and then by the time the tax bill is due, it actually went down in value? You're still on the hook for that appreciation when the tax day was due. So it is just bonkers. And they can't not do this. They have to do this because they're spending so much money that they don't have another choice. They can only print so much money. So now they're going down the let's tax as much as humanly possible route. And this doesn't end well. And the reason it doesn't end well is, you know what happens when they raise taxes too much? Capital flight. People leave to more favorable tax jurisdictions. So long term, this isn't a good move for Europe. If I was an entrepreneur based in the Netherlands, I would move out. If I was a wealthy person based in the Netherlands, I would leave. Like, what am I getting for that 36% wealth tax? Guys, this isn't an income tax. There's an income tax. There's a capital gains tax. Now there's a wealth tax, which, as Opti alluded to earlier, I would say that is a form of theft, because you're not selling. This is crazy. They're taxing you based on your wealth. It's not like you sold something. It's not like, okay, I bought the SanDisk stock. I made 5,000%. I'm now a multi-millionaire off of like a $10,000, $20,000 investment.
Damn, what are we doing in Bitcoin?
I haven't sold that SanDisk stock. The government in the Netherlands is saying, hey, you know what? You still owe us 36% of that appreciation, regardless of whether you sold it or not. That's insanity to me, right? So again, I think that as we continue to transition into the information age, as we continue to disintermediate money and state, as we continue to disintermediate information and state, I think we already passed that phase. The internet, solidified that. Europe's still fighting it, but in the US after the Biden administration, and then after Elon bought X, I think that fight is we definitely won a big battle there. But the biggest battle to come is the separation of money and state. They have all the guns, they make all the rules, and this is the ultimate test. Is Bitcoin going to win this? And I think it will, if it stays decentralized and secure, because the only way governments are going to be able to ban Bitcoin is if governments all around the world in cohesion say, hey, you know, this Bitcoin thing's not working out. That's why El Salvador is so important. That's why the election of President Trump was so important, right? That's why Elizabeth Warren was so against any of these acts being passed. And the reason that she was so against all these acts being passed is because she didn't want Bitcoin to be integrated into the traditional financial system, because she knew that once that Trojan horse was let in, it was going to be very difficult to convince the big banks to walk away from number go up technology. But as Alex Gladstein wrote in his famous article, Bitcoin is a Trojan horse for freedom, number go up technology and freedom go up technology are inextricably linked. You cannot separate the two. So I think Netherlands is committing a catastrophic mistake. We've seen these wealth taxes being implemented in Europe before. And what ends up happening is that the governments actually end up collecting less tax revenue because the people that do have money, they leave to Dubai. They leave to another country, right? And then that's where the exit tax conversation starts being brought into the discussion, where essentially if you decide, hey, listen, I'm going to give up my citizenship for this country because it's no longer favorable for me. If you give up your citizenship, you have to pay a 40% exit tax. This is crazy. And then I don't have anything against taxes. Like I want to go on record to say that, because like you need, I mean, this is a very hot button issue.
Roads.
You could, but you listen, I don't have anything against taxes. The problem is that the money that goes into taxes, there is no accountability there, right? We as the people, right, don't have an insight into how that money is spent. Like we had like a 20-year-old kid go to, what was it, Wisconsin? It was Wisconsin, right?
Was it Minnesota?
It was Minnesota.
I don't know. I don't remember.
And he did better investigative journalism than, the legacy media outlets. And basically he discovered all this fraud and corruption that was happening. Those are your tax dollars, right? So when I hear a politician say, hey, let's raise the taxes, it's like, dude, but like you choose to look the other way when there's corruption. There's no accountability. But at the same time, you want to raise taxes and you want us to go along with it. Like, this country was built on the fact of no taxation without representation. Do you feel like you have representation of where your tax dollars are going? Do you feel like your tax dollars are being spent well? And do you think it's a coincidence that the same year that the Federal Reserve was established was the same year that the income tax was established? And you know how they sold the income tax to the American people? They said that the income tax was only going to be for the top 1%. And the tax rate was only going to be 3%. By the time World War II came around, the tax rate for the top 1% was 90%, 90%. And it wasn't until Reagan that the tax rate went down. So again, it's not that I'm against taxes. It's that there's no accountability to where this tax money is going. The case in California with the governor of California, Gavin Newsom, and the infamous the railroad. Right, that was supposed to be built. We all know that very famous case that happened. Right, they built what, like a mile of railroad, and they spent billions of dollars. Where do you think those billions of dollars went? Like, where do you think they went? Do you think they just disappeared into the ether, or do you think they just took a little bit and
a lot of people took a little bit.
They just took a little bit off the top and put it in the pocket, right? So like,
Sounds like the red state,
so like, again, like,
the USSR.
like, I'm not saying that, but like, what I'm trying to say is like, listen, I'm not making the case that taxes are bad. Clearly you have to follow the law. Clearly you have to pay your taxes, but clearly the system is broken. And I think that fundamentally comes down to broken money. And I'll explain to you why. As long as the government has the ability to create money for free that everyone else has to work for, there's a misalignment of incentives. And until those incentives are aligned, you're going to continue to see the same behavior. Not because these people are bad, not because they're twirling their mustaches and scheming and saying, ha, 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 we got them now. No, it's because the architecture of the system incentivizes a certain behavior. That's all I'm saying. So anyways, guys.
Wait. One last thing. I was going to add something to what you said, but I did just see on Twitter a breaking news update here in regards to the Clarity Act, since we just covered it. It looks like they're trying to kick us off the show anyways. But here is the literally 18 minutes ago. So this is the latest update. Eleanor Terrett, Scoop. The Senate Banking Committee is preparing to notice a markup for the Clarity Act as soon as tomorrow and has circulated draft legislative text to select industry members ahead of a potential Thursday vote. According to multiple industry sources who have seen the text, the language is reportedly still being finalized with additional edits expected to reflect priorities from Democratic offices. One source told me the overall vibes after reviewing the bill and coordinating with other industry leaders are positive so far, though some bracketed sections are raising concerns that key provisions previously thought to be settled may still be in flux. It's actually moving pretty fast. I'm not going to lie, but yeah. Latest update.
Guys, before we close out the show, I do want to give a shout out to the next Bitcoin conference Simply Bitcoin is going to be at. Guys, the largest Bitcoin mining conference on planet Earth, July 21st through the 23rd in Miami, Florida. The Simply Bitcoin team will be there. We'll have a news desk. We'll be streaming the entire conference. You're going to see the latest and greatest on what's happening in the Bitcoin mining world. If you're trying to get a job in the industry, if you're trying to network in the industry, if you're trying to see the latest and the greatest Bitcoin mining entrepreneurs in the world, you definitely don't want to miss Mining Disrupt 2026. Again, it's in Miami, Florida, July 21st through the 23rd. Get your tickets now before the prices increase. Use the link in the video/podcast description and you'll get 20% off your tickets to Mining Disrupt. I think you can use the promo code Simply or Simply Bitcoin and you'll get 20%
Simply
off.
Bitcoin,
Simply Bitcoin, and you'll get 20% off your tickets. All right, everybody, that was today's show. Thank you guys so much for tuning in. We wouldn't be here without you guys. We appreciate you. We love you all. And we'll see you guys tomorrow on the next episode of Simply Bitcoin Live.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.